In the third quarter of fiscal 2026, Micron Technology delivered a historic top-line performance, with total revenue hitting $41.5 billion, up a staggering 346% year-over-year. This represents the single largest dollar increase in the company's history for a single quarter. Four core engines drove this massive result. Cloud memory led the charge at $13.8 billion, a 307% surge. Core data center followed closely with an explosive 653% growth, reaching $11.5 billion. Mobile and client also hit $11.5 billion, up 254%, while automotive and embedded added $4.6 billion, growing 311%. Beyond the top line, profitability was exceptional. Stripping out $6.4 billion in cost of revenue, gross profit landed at $35.1 billion, an 85% margin, up 47 percentage points in just 12 months. With operating expenses tightly managed at $1.7 billion, operating income reached $33.3 billion, an 80% margin. Even after a $5.0 billion tax bill, net income closed at $28.2 billion, translating to a 68% net margin and an earnings per share of $25.11. We are witnessing a hardware company printing software-grade margins, a direct result of severe memory scarcity in an AI-driven market. Tracing this revenue path across the last 4 years reveals a brutal down cycle followed by pure euphoria. Back in early fiscal 2023, total revenue collapsed and bottomed out near $3.7 billion as weak PC and smartphone demand crushed pricing. However, instead of grinding through a traditional, slow recovery, the AI inflection point triggered a vertical breakout. By early fiscal 2026, revenue had rapidly scaled past $13 billion, before violently launching to $23.9 billion and ultimately $41.4 billion this most recent quarter. Looking inside that final towering bar, all four segments fired simultaneously, with cloud memory, mobile and client, core data center, and automotive all posting massive gains. This is a breadth of strength the industry has genuinely never produced in a single quarter. To understand how we got here, let's break this quarter down into 4 strategic battlegrounds. First, data center markets generated $25.3 billion, capturing 61% of total revenue. Computing product lines surged 307% year-over-year, while storage climbed an incredible 653%. HBM4 alone crossed $1 billion in revenue. Enterprise SSDs topped $5 billion, and management is flagging a structural supply gap that will persist until at least 2027. Moving to the edge markets, mobile and client generated $11.5 billion with a record 86% operating margin. The catalyst here is a massive shift toward premium AI devices. High-capacity memory is now mandatory to power on-device agentic AI, handing Micron near absolute pricing power as DRAM supply stays tight. Meanwhile, automotive and embedded posted $4.6 billion. The forward math is compelling. Level 2 plus autonomy requires 5 times the memory of a standard vehicle, and this tier is projected to reach 48% market share by 2030. Add in humanoid robots, which need 10 times that baseline, and vehicles and robots are essentially becoming mobile data centers. Finally, looking at the financial shield, an 84.9% gross margin is locked in by a $100 billion take-or-pay contract backlog running through 2030 alongside $22 billion in global expansion funding. But note the paradox. Against that record revenue sits $31 billion in receivables. Massive paper sales, but cash is still working its way through the pipeline as customers finance their own AI build-outs. Look at the sheer velocity of Micron's financial trajectory. The growth rates are absolutely staggering. Micron's NAND revenue surged 99% quarter-over-quarter, compounding at a 122% annual rate, while DRAM is right there with it, growing 67% sequentially and compounding at 129%. Micron's revenue path tells the definitive AI story. From a cyclical low of just $3.5 billion in Q3 fiscal 2023, the company completely broke out, exploding to $41.2 billion by Q3 fiscal 2026. That violent acceleration is not just a normal memory cycle. It reflects structural demand heavily outrunning Micron's ability to scale supply. And within the broader competitive landscape, Micron is no small player. In DRAM, Samsung commands a 38% share, followed by SK Hynix at 29%, with Micron aggressively holding 22%. In NAND, Samsung leads with 29%, SK Group holds 18%, and Micron captures a crucial 14% against major global players like Kioxia, SanDisk, and YMTC. This dynamic sets the stage for a historic battle among the memory titans. Global DRAM revenue just hit a record $100 billion, up 260% year-over-year, while NAND flash revenue reached $46 billion. Together, the entire memory industry is on pace to cross $1 trillion in annual scale by late 2026. Three companies are fighting for that trillion-dollar prize. Samsung remains the overall volume leader with 38% of DRAM and 29% of NAND, holding 21% of the high-bandwidth memory market backed by the largest wafer capacity on Earth. SK Hynix dominates high-bandwidth memory outright with a massive 58% share, using advanced die stacking to remain the first-move partner for AI acceleration. And then there is Micron. They are rapidly closing the gap, now holding 22% DRAM and 14% NAND share, while their high-bandwidth memory share has leveled with Samsung at 21%. Micron's distinct edge isn't just raw manufacturing scale, it is structural. They boast a $100 billion take-or-pay contract backlog locked through 2030 and $22 billion in committed funding backing their HBM4 and 1 gamma DRAM expansion. Three completely different strategies attacking one exploding market. To feed this exploding market, a staggering global manufacturing expansion is underway, and the memory makers are at the absolute center of it. In the United States, Micron is leading the charge with a massive footprint across Idaho and New York, adding 300,000 wafers per month of new capacity. They are cementing a crucial made-in-America edge, while Samsung scales its own 100,000 wafer Megafab in Texas. Looking at South Korea, the historical memory capital is answering back, with Samsung and SK Hynix each adding 200,000 wafers per month in Pyeongtaek and Yongin. Micron is also fortifying its global network, expanding in Hiroshima, Japan, and aggressively scaling its advanced packaging hub in Singapore. But the real capacity shock sits in Greater China, where CXMT's Hefei complex is bringing an immense 600,000 wafers per month online to challenge the incumbents. Added up, new fabrication plants are rising simultaneously across the globe, every single one of them chasing the exact same scarce resource, memory. Projecting forward to 2030, Micron's roadmap reads like a master blueprint for owning the AI memory stack. On the technology front, their HBM4 and HBM4E dominance is clear. They're already shipping 36 GB, 12 high stacks, with 48 GB modules carrying custom logic now in testing. Their 1 gamma EUV node delivers a bit density increase above 30%, while a massive 245 TB SSD is purpose-built for AI vector database demands. Backing this technology is a colossal $150 billion investment program. Financially, the company is shielded by that $100 billion take-or-pay contract backlog running through 2030. This guaranteed production volume covers 20% of Micron's total DRAM output and 33% of its NAND output, already sold and locked in. Additionally, $6.44 billion in CHIPS Act funding cements their supply chain edge. Follow the demand curve. AI PCs and smartphones now require up to 128 GB of LPDDR5X. Level 4 autonomous vehicles require over 300 GB of DRAM each. And finally, humanoid robots represent a massive 20-year growth driver running from 2028 through 2035, demanding highly complex AI brains and spatial perception. Crucially, executing this roadmap requires severe cost discipline. While research and development spending grew 36.8% year-over-year, its compound annual growth rate remains a controlled 12.9%. Selling, general, and administrative expenses grew 11.4% year-over-year, compounding at 28% off a much smaller base. Looking at the historical trend, total operating expenses barely moved for 3 years, hovering between $1 and $1.2 billion a quarter from fiscal 2022 through most of fiscal 2025. It was only in the last few quarters that expenses naturally scaled up to support the AI boom. reaching $1.7 billion in the third quarter of fiscal 2026. Compare the controlled, single-digit cost scaling to a top-line revenue explosion of 346% over the same stretch. The message is incredibly clear. Micron dramatically scaled its revenue by triple digits while keeping its fundamental cost base firmly in check. Following this margin trajectory, you are watching a company completely transform. Net income margin opened at a healthy 30% back in mid-2022 before collapsing straight through zero during the down cycle, bottoming out at a brutal negative 63% in early fiscal 2023. During that trough, Micron lost over $2 billion on just $3.7 billion in revenue. From there, the company orchestrated a steady climb back to break even, followed by a rapid, violent acceleration. Margins expanded progressively through the 20s and 30s, eventually soaring to 58% and an incredible 68% in the two most recent quarters, as net income hit $13.8 billion and then $28.2 billion. Experiencing a margin swing of over 130 percentage points from the absolute floor to the ceiling is the ultimate textbook definition of operating leverage inside a memory supercycle. This operational excellence is heavily reflected in their earnings track record. If you look at the historical trend, Micron quietly and consistently beat Wall Street revenue estimates for years, grinding out modest upside quarter after quarter. But as the AI supercycle took hold, the last 2 quarters broke that old playbook entirely. We saw a massive 19.5% surprise beat in Q2, immediately followed by a 15.4% beat this quarter, with reported revenue of $41.5 billion blowing past estimates. If you look at the chatter across financial networks and online trading communities right now, Wall Street is scrambling to catch up. Analysts are aggressively revising their forward models upward, projecting revenue to scale past $50 billion next quarter and eventually clear an astronomical $63.8 billion by the end of fiscal 2027. The earnings per share chart tells an even sharper story of outperformance. Micron hasn't missed a single EPS estimate over the last 9 quarters. While the beats in fiscal 2024 and 2025 were solid, fiscal 2026 marked a total acceleration. They delivered a staggering 32.8% upside in Q2 and followed it up this quarter by printing $25.11 against a $20.90 expectation. Online financial communities and institutional desks are buzzing because of this exact momentum. Driven by this pure operating leverage, consensus models are now projecting EPS to climb above $31 next quarter, continuing a relentless upward trajectory toward nearly $40 per share by late fiscal 2027. It is a profitability curve that the broader market is still struggling to price in, because it would have sounded like absolute fiction just 18 months ago. So, where does all this leave the stock right now? If you monitor the financial forums and institutional chatter, the FOMO is palpable. After an explosive initial reaction to the earnings print, the stock has consolidated around the $1,032 level. For Wall Street, this pullback is being treated as a massive setup. Right now, the average 12-month price target sits at $1,574, representing a massive 52% upside from current prices. But look at the absolute bull case. Top analysts are pounding the table with a maximum target of $2,200, implying over 113% growth. The noise around temporary market pullbacks hasn't shaken institutional conviction one bit. Out of 52 analysts covering the stock, a staggering 41 rate it a strong buy with 8 more a buy. Take a step back and look at the macro picture. When a hardware company locks in its entire advanced memory capacity for the next several years, secures $100 billion in guaranteed revenue backlog, and prints software-grade margins exceeding 80%, the smart money does not bet against it. This isn't just a cyclical upswing. This is a structural repricing of the entire memory sector, and Micron has positioned itself perfectly at the center of the AI infrastructure build-out. A final note. This video is for informational and educational purposes only, and nothing here constitutes investment advice. Always do your own research before making any financial decision. Thank you so much for watching this deep dive all the way through. If this comprehensive breakdown of Micron's historic quarter added value, please drop a like and subscribe. The next deep dive into the companies actually building the AI supercycle is coming soon.